high. The day's biggest gainer in Asia, Vietnam, where the benchmark in Ho Chi Minh rallied 4%. Indonesia rose nearly that much, and in Taiwan, investors are betting on improved ties with China, and that sent the TAIEX rallying the most in 2 months. China rose as well to a one-year high. But the most resilient of all in the past month happens to be Sri Lanka. Colombo's all-share index rallied over 30% since the long-running civil war ended there. So far this year, the benchmark index is the 4th best performing in the world, up 60%. One company who believes in Sri Lanka's recovery story is Calamander Group, a Singapore-based investment company that will create the first private equity fund focused on Sri Lanka alone. Let's cross over to Singapore now and speak with Roman Scott, the managing director of Calamander Group. Good to have you with us, Roman. And I understand that the focus of this fund is going to be a wide range of a basket of commodities, from rubber to tea to timber and coconut, among others. I mean, why commodities?
Well, we like the overall soft commodity story globally, but we understand that global investors who are less bullish and less knowledgeable on Sri Lanka as ourselves will take comfort in the fact that we're not only going to be playing what we think will be one of the fastest growing emerging economies for the next 5 years, but the soft commodity story. We particularly like rubber. There's some very good rubber operations there, both downstream in the actual raw rubber and rubber companies. We like tea, which of course is famous for Sri Lanka. We like coconut, and also a couple of other things like stone, granite, ceramics are very good in the country.
And I understand that you're planning to invest between $50 and $75 million at the onset, but how do you see this investment growing in, say, the next 3 to 5 years, as you mentioned 5 years earlier?
Well, we as I said, we're exceedingly bullish. We've most probably the longest running overseas and foreign investor bulls. We've been investing in the country for a decade. We had a bit of a false start when we started in about 2000. Around 2003, there was a peace process that lasted for about 18 months, and we thought the engines were warming up then. We were looking at starting a fund then. It didn't happen, of course. It went back to war. So now we're exceedingly happy that we, after a 10-year wait, can finally get this going. But people forget that Sri Lanka has been one of the fastest growing economies in Asia for the last 6 years of war. It beat all the ASEAN countries other than Vietnam, 6.3% average growth. And of course, India and China are ahead. And just from the Western province alone, because the country has essentially been functioning only on the south and the city centre of Colombo, that has been growing at 18% a year for the last 5 years. So we think that the economic catch-up, because it was never invited to the growth party of the last 5 years, will be absolutely huge.
But isn't that exactly the risk? I mean, an economy coming away from 30 years of a civil war, what is the risk that the government there actually fails to get its economic and political policies right?
Well, I would say 6.3% average growth for the last 6 years is something's been going right, and as I mentioned, 18% for the Western province. The key thing that the government has to look carefully at is not growth, entrepreneurialism. It has one of already the best structured economies in Asia, very balanced, diversified economy. Services sector is already 58%. It's not an export-dependent economy at risk from global trade. So the Sri Lankan government's issues are debt and debt management, and they have run a public deficit of around 8%, and inflation. It's always had an inflation problem like Vietnam, but just like Vietnam, that doesn't hinder growth. It just leads to difficulties with containing the price of goods and services.
Roman, just very quickly, I know that you don't like to invest in tourism and hotels, but doesn't the end of a civil war usher in peace and security, inviting a lot of tourists to Sri Lanka?
Absolutely. Sri Lanka's achieved that phenomenal growth rate despite the fact that they've never managed to breach 500,000 tourists, largely because of the problem, and its tourist potential is absolutely huge, and we're very bullish on that. But the main economic driver that we could profit as investors from there is very much infrastructure driven in hotels. It's a capital intensive business. We've looked at it before. We're not that keen on things that are that capital intensive at this stage of its recovery versus cash flow businesses like commodities, like factories producing rubber mats, like tea factories, that kind of thing. So it's very much us being defensive, not that it isn't a good play.
All right, good to talk to you. Thank you so much for joining us. Roman Scott, Managing Director at Calamander Capital. Time now to fast forward for stories that may move markets tomorrow. Bloomberg's Zeb Eckert joins us from Hong Kong. Interest rates at the top of the agenda, Zeb.
Kathy, you better believe it. Let's kick it off quickly here. The Federal Reserve meeting overnight in Washington. Ben Bernanke and company expected to keep interest rates unchanged, keeping them at a record low. Now, we also have interest rate decisions in Hong Kong and Taiwan tomorrow, keeping benchmark rates on Thursday. Hong Kong keeping the rate unchanged. Taiwan expected to do the same. And also, Warren Buffett making news overnight. We want to know, how much would you spend, how much would you bid online to have lunch with Warren Buffett? Well, a Hong Kong hedge fund manager is paying $2 million to do just that, Kathy. What a lunch. Wouldn't you want to be there?
I would. I definitely would. And with you, Zeb, thank you so much for joining us. That'll do it for Asia Business Tonight. Be back tomorrow.